Hello everyone, welcome back to WINFXTRADING YouTube channel. It's been a long time I uploaded a Forex synthetic video content. The reason is because I don't just upload video without having any particular problem to solve. Each video I upload has a specific problem to solve. So before I continue, if you are just visiting my channel first time, try to subscribe. If you have already subscribed, try to share this video to your friends so that they will be able to have the same privilege you have. And if you have also come just the first time, you are just subscribing right now, try to share and comment, try to like, so that YouTube will push us to a very high level of audiences. Okay, today we discuss about saturation critical Endscreen market price reversal problems, how it affects your trading. Saturation critical Endscreen market price reversal problems, how it affects your trading. We shall discuss we shall analyze these problems in both synthetic and Forex market, and the time frame of interest should be M1, M5 up to H1. So I'm going to take you to synthetic asset called the Volatility 75 index. These are big problems that most traders cannot be able to solve, and it keeps making them to lose and blow their account. So in this video, I'm going to address the problem, like I'm going to bring out the facts, and it's left for you to make your right trading decision from the fact. And remember, this is a free content, so don't expect it to solve all the problem. Don't expect my analysis to give you all the profit, because it is a free content. If you actually need a premium trading content that will actually blow your mind and make you a profitable trader, then you need to enroll for my courses. Check down the description of the video, you will see the courses I offer, from the boom and crash millionaire course down to Volatility 75 indices millionaire course. Their cost of enrollment is actually cheap, and what you learn and what we gain is far more valuable than the money you are going to be paying to learn. Okay, so you see, this is M1 right here. See what I mean by Endscreen? Here, this level here is the top screen, the end or the top screen. Here, this level is also the bottom or the end screen. The end screen can be all top or the bottom. So this is M1. For my own suggestion, if you are actually going to make an entry, then you should do it you should get the signal in higher time frame like M15, M30, H1 or H1, and go to M1 to get the final entry. The higher the time frame of analysis, the stronger the signal and more longer it will stay. Okay, now check. I'm trying to analyze this as a fact. I don't want to start from a higher time frame, no, because I'm just bringing out the fact and not actually. I'm being like double-sided. I'm just making it as like I'm trying to analyze something considering the both sides of either you are losing or you are gaining, I'm being indecisive. There is no specific direction here. I'm just trying to bring out the fact that some people don't know that it really affects their trading. So you see, when this market just move up like a plane that has taken off in the M1, you see what it's doing? It just follow a path of wave, like impulse, retracement, impulse, retracement, impulse, retracement, until it reaches here, the end of the snake, which is the top. Now a lot of traders have issues here. Like they will face with the problem is, should I be selling? Should I be buying? Okay, so look at the high, then the next high, next high, next high. When the market is here and it come back here, you say, wow, why not me entering here? Then see the biggest problem, we call it movable levels, like non-fixed levels. You see, this level here, this Endscreen, and Endscreen is not actually fixed as you think. When the price came here, depending on the demand and supply in the market, that is the forces between buyers and sellers. This level, this price, this Endscreen price level of 96, 29 and 20.86 can be broken, and once it is broken, it takes new values, and then you see the screen start moving. The screen of your laptop or the screen of your phone will start moving, become a mobile object. If you see it live, it will be moving, and then this high, this level will come down here, maybe possibly to this level, and then the new price will hit. Okay, so it is a complicated problem, but I'm trying to tell you the element of this problem. When you see them, how to actually make your trading decision. You see, so here the market reverse, come back here, reverse, come back here, reverse, reverse. I know you as a subscriber, you that is watching this video, you're actually trying to hear me say, how do we buy, how do we sell? If I'm telling you how to buy, I'm telling you how to sell, I want you to bear in mind that it's not going to be 100% accurate all the time, because of this level is always, is sometimes movable, sometimes it is respected. That's what you have to know. I made mention of higher time frame analysis from H1 down to, let's say, M15 or M5, but you can't just place entry, you can't just conclude in those time frame because of the volatility of the market. You need to go to M1 to see the truth. Imagine in higher time frame, this thing that happened here will tell you to sell. Then imagine you sold here. Most of you are scalpers, you sold here because M15, MO or MO30 or H1 have told you to sell. You sold here without knowing that the volatility market is behaving in such a way that the candles length are very huge. In any time frame, it's very huge. The activities represented by a candle is okay to blow your account. Are you getting it? So imagine you enter sell here because you have believed that it is selling in MO15 to H1. You enter here. What happened? Your account is going to be subject to a huge loss of over close to 6,000 people. And most of you used to use big lot sizes, and that will affect your account. Remember in the previous part of this video, during the beginning of this video, I told you that I'm only bringing double-sided facts. I'm only, like when I say double-sided, I'm not being one-sided. I'm trying to analyze the whole problem as the way they used to be, but I'm not going to actually be telling you the secret of how this will help you to become a successful trader, because this is a free content. If you really need it that way, then enroll for Volatility 75 millionaire course, or enroll for Forex margin trading course, or enroll for synthetic margin trading course. I will go to Forex market and show you how this problem exists. They do exist, and it keeps blowing people's accounts. These are big problems. See, you will enter here, and what happened? It will come up here. Depending on your equity level, your account can get blunt here. Depending on the lot sizes, number position, your equity level, your account can get blunt here. I'm sorry, it can get blunt, or you lose all here. But if you understand the Endscreen price reversal problem, the best thing to do is to ask yourself, which direction am I? What is the future direction of this market? The futuristic direction of this market. Okay, what will be the ensuing direction? So the only way to solve this problem is to actually get this Endscreen situation in higher time frame, and then look at the behavior of the highs and lows. If the highs and lows actually behave in such a way that the direction is going downtrend or changing to downtrend, then you have to be positioning for selling. If the highs and lows behave in such a way that the market is tending to uptrend, then you have to position for buy signal, and you have to get those buy signal in higher time frame. As I said, MO15, MO5 down to H1, and then go to MO1 to get your entry. So let me go to higher time frame to get such idea. Let me use H1, because the higher time frame you use, the stronger and more lasting the signal will be. This is okay. See, this is the Endscreen problem here. You see, nobody will teach it, but I'm teaching it here. You see, these are the things that has already happened. Okay, all the way, this market starts from here. I'm going to be talking about the sell signal. This market started from here, like airplane, move the usual impulse and retracement behavior mode, like it keep moving in impulse and retracement until it reaches this level. Try to always use the minimum zone level, and keep pushing this chart towards this towards the right, so that you get the best. Because if it is towards the left, it will not be accurate. From experience, it can never be accurate. So you see, this is the Endscreen. It's not a month you should wait for the price to hit here. Any price that is very close to here is Endscreen price problem, or Endscreen price. If it is here, maybe 10%. If it is 10% away from just 10% away from the nearby Endscreen, then still an Endscreen price problem. Okay, So if it is here, we can still analyze. Here is okay. So when you see this happening, this is a highest high. Okay, you need at least a high or low differential for you to make a decision. You see, this is a high, and then you are waiting for another high that will be respected. This is another high. Now looking at this high couldn't break this high, and this high is lower than this high. That is a sign of downtrend. That is a sign of trend change to downtrend, and you should be looking for sell signal and not buy signal at this situation. What you need to do is to go to lower time frame. Before I continue, let's put it back to H1. Remember our arrow was there, so this is the arrow. Let me change the color of the arrow to red so that let me use it as a tracker in the M1. You get the science here. Okay, it's going to become a tracker. I'm looking for it, like I'm going to use it to track this zone. Let's see where it is. I've not seen it. Where should it be located? Let's go back to H1. Okay. I'm trying to locate this in M1, but it's not locating because the graph cannot show it us. But I'm going to use another event in M1 to show you how to enter here. So actually it is looking like something like this. So you have to come back to M1. Maybe you open your chart and keep watching M1. Just watch it like television. The price we hit here, yes, don't panic, it is coming up. So here it came here and reversed. You couldn't break this high. Then don't panic. You need at least 2-point differential. Yes, two lows that have potential difference that are not at the same level to conclude that this is real. So what you need to do is to wait for another reaction. That is, wait for price to come to this level here, this one. Either, this is a volatile market. The volatility is, let's say, 100 times and higher than that of normal Forex market. So even Forex market have their own natural volatility. Okay, so all this also apply in Forex. So don't expect the next high to be either equal to this one or just less than. There's probability that it will have overshoot. Yes, because of the volatility in this market, to have overshoot or high spikes. Okay, very huge spikes like during thunderstorm. So here you will enter sell here, or you enter sell here. So you need a very large stop loss level in the higher time frame. You go to higher time frame and increase the like several pips, so that no matter how the volatility is, you can be cut off from your trade. Then in the long run, what happened? Just tell me the truth now. What is happening here? Let's tell ourselves the truth. In the long run, what's happened really here is that in the long run, the market sold. In the long run, it sold. This, I'm just bringing the chart. I'm going to show you what we still the same thing. came here. Yes, it reached. The more you will see the spike, the highest, the maximum point or overshoot happening in towards the end of the screen, the more stronger the signal gonna be, because here is the maximum height that reaches this end screen. This high is here, then the next high happen here. Don't panic. These 2 points, point 1, point 2 has become a potential difference. We are not looking for a high that is closer to any of them, like closer to this one or this one. You are going to sell. Remember, I'm not going to teach you how to place your stop loss, how to take your profit, or some of the complicated problems with this idea. There are a lot of problems that needed to be solved. You need to enroll for the premium courses. Check down the description of this video. So I learned it, and you become successful trading overnight. You become a millionaire or billionaire trader overnight. It's very simple. You need to pay a sacrifice to get all this data, but at least if you sell here, what happened? It's selling. How do you understand what I'm saying here? Because I initially talk about being specific. Imagine you are not specific and you just buy because you saw you just buy. No matter how you place your stop loss, you are going to lose your account. You are going to blow your account, because I emphasize the fact that you must sell. If you notice a downtrend change, you must only focus on selling. No matter how you are tempted to buy, never you try it. Don't try that shit. And if the trend is actually changing to up, you must position to buy. So let's talk about a situation where the market is actually changing to up trend. We're going to use H1 here. It's a volatility market. Get a real life example. With this Endscreen problem. A real life example. The notion of double bottom, triple bottom, is not actually. They still apply here, but I will not be talking much about them. They still apply here, but is another subject to discuss. Is weekly. If I'm going to rate it, maybe 30% or 50%. Let's say 50% applicable. But the truth is that it's not up to 50%, 30% or 20%. Okay, let's say 20%. 20% of time, double bottom or triple bottom can lead to trend change, but not always, because I told you that the Endscreen levels, the Endscreen price levels are always, they are not always fixed. It can be broken. It is movable. So a breakout can happen in such cases. So those double bottom and triple bottom will not hold all the time. That's why I say that they have 30% implication to this analysis. So we really need potential difference. That's what I'm talking about. So see it. This problem analysis majorly employs potential difference theory to work. So here you see this point, this low. This is a H1, so you're gonna be strong. This low, and then this low. So this become potential. But when you talk about double bottom and triple bottom, it means that there is zero potential. They are the same level. I'm not going to even discuss about double bottom, triple bottom, or other multi-level bottoms or tops, because they are actually they don't have much implication on this idea, this Endscreen problem. Yes. So I'm not going to be discussing them, but they are subjects that actually help you to trade. But you need to enroll for my courses. I can't be showing you everything here, or the actually those premium or golden strategies that in the courses I beg and try to enroll. that money you close several times, use it to buy the course and change your life overnight. Trade and make huge profit like pro. I get it. So see this high and then this high. There is a potential difference. When I say potential, I mean difference in levels. There is a price. Let me show you. Maybe you haven't understand what I mean. The potential difference here is here and here. If you check the price level, there is a potential difference of 4,088 pips. Okay, just like in electrical field, the current is able to flow when there is potential difference between 2 points in space or in an object. Then the current will flow from one potential to another, from one potential point to another potential point. So at times the higher the difference, this potential difference, also the stronger the signal. Yes, the stronger the signal. So you're actually waiting for another potential point to come very close to this point or this point. So the closest one is this one. So you are going to be buying at this point. You see, you are going to be buying. And what happened? It really bought. Crazy. But what you need to do is you need to go to M1 to finalize your entry, because when you see this signal, when you will spot this signal here, when you notice this signal here, when you go to M1, you will see that maybe the price has actually quickly moved up, and then when you go to M1, you see the length of the move. Let me show you. I can't get that zone, but I can use something that happened with respect to the Endscreen. Imagine here. Imagine you spot when you come to M1. Let me. I don't want to use zero potential in M1. I want to use the potential difference here. Yes, I'm going to use this. Yeah, you see, I'm using potential difference in any of those times. You see here, this point and this point. If you compare the 2 points, this point is higher than this point. So that shows there is a upcoming uptrend. Now, imagine in higher time frame, you might saw a signal at this level to buy in higher time frame, yes. But when you come to lower time frame, you notice that it has already bought. So you buying here, you are going to subject yourself to this potential. You are going to subject yourself to this sell about 7,000, almost close to 7,000 people, and that alone can blow your account. This is a volatile market, so your entry has to be accurate. That alone can blow your account. But as a good trader, what you need to do is to wait for retest towards nearby potential points. Yes, they're always hungry. I'm not going to lie to you. Volatility market is modeled on the random number generators. But this random number generated are subject to demand and supply. Yes, in as much the numbers are randomly generated, they are subject to who is buying, who is selling. So they're always hungry to come back to potential levels or near potential levels. So you have to be buying here. Don't risk your money here, because you will not be happy with what happened next, which is blowing your account. Okay, this video is taking time, almost close to 30 minutes, but I will not give up. I will take you to Forex market to make sure you learn something. Okay, this is good. This is Forex market. So this is good. This is H1. The end screen problem is here. You see, this is the end of the screen. This high and then this high. It's not a high, it's low. I'm sorry. This low. Yeah, this low. this low. The difference between low and high is that the low is at bottom, like the bottom of a candlestick, or bottom of like a low is just a low can be a swing point, or the bottom of a candle. A high can be a swing point or top of a candle. Swing means where price reverse, so take note of that. I will not go deep into analyzing all this. People should go for the cost. So this low and this low, if you compare the two, this low is higher than this low. I want you to carry everything along. Maybe the way I'm explaining this in Forex, maybe I didn't explain it in synthetic, but it's still decent. Maybe I just missed to say that, like, if I say high at bottom, then replace it with low. So this low and then this low. So this low is higher than this low. So higher lows means uptrend means change to the uptrend, or means that the uptrend is about to come up. You get? So take note of that. I will also explain this with respect to top of the screen. This is actually bottom of the screen. We are actually looking for this type of potential difference, whereby this a low that is in differences in lows, like this low is higher than this low. So actually at bottom we are looking for buy signal. We are actually looking for reversals, which is at bottom with the reversal we actually become a buy signal. So what you need to do is, you make sure that you push this thing towards the right, so to get the truth, and then you really need to wait for a nearby potential. You really need to wait for a nearby potential to happen again, like this one. Yeah, this one. So you can buy here, you can enter here and buy. That is it. Yes. Like each time a price reacts to a particular potential or near a potential, it quickly move in the new trend, in the new, like it quickly moves away from that potential. Yes. Like if we have spotted a potential difference between 2 points, the third point or other point that will be coming near those points is in such a way that the price will leave those, like once they approach or near the previous point, they'll quickly change and reverse. That's why I told you that Endscreen problem is very, very complicated problem, but I'm just trying to analyze it to make sure you people are doing great. But let me tell you, my free content can take you far. You need to enroll for my courses. I keep hammering on it because I know the value, I know the pain you people are passing to losing and blowing your account, and it only takes a wise man, to make a decision. The more you invest in education, the more you become successful in life. So invest today to learn. Okay, so let's look for sell signal. But all the while, try to go to M1 to finalize your entry, because there might be some shift. And when you go to M1, you see a high profile, you see a high profile potential that might be against you. As I explained, this is synthetic market. Imagine that higher time frame like H1 or MO15 or other higher time frame like MO30 have shown you to buy. And then it show you to buy, but in that higher time frame it was here and you buy. You are going to lose. You are going to be losing by this potential. But as a strategic trader, as a trader that knows the potential issues and the Endscreen issues in lower time frame, you can come up here and open your screen, keep watching as if you are watching television. All you need to do is to get the best. So maybe you saw this. and then you saw this. You can't enter here. You have to wait, because I told you they must always come back to the potentials they leave or near it. You wait, and then what happens? You are going to buy here. You are not going to lose, and it will help your stop loss to be small, a very tight stop loss but huge target. Imagine you're just, if you bought here, then you're placing your stop loss here is very large. But if you bought here, maybe your stop loss is here, it's very small, and you are making huge profit. What happened? It bought all the way from here to here. At least, please, I'm not going to teach you how to take your profit or put stop loss, but at least here can be a potential profit. Okay, so let's go back to our H1 and look for buy sell signal. Okay, okay, this is a perfect example. You see, this is an Endscreen, the top Endscreen. The price hit here. That's a high. And then this is another high. I told you highs are swing, lows are swing also. So this swing. Then what do? I say, why is trading? You are waiting for a potential that will come here. That will be very near to here. This one is one of it. This is a potential. Like if once you discover two potential difference, like two potential, the third potential can be either close to any of those potential or about 10%. About, like, when I say 100% close, then it's close. Then about I'm sorry, when I say 10%, it's not 10%, maybe 90% closer. From 90 to 100% closer is valid. 80% can be acceptable, because at least you have to take risks. You don't need to relax and say, I'm waiting, and then you miss the opportunity. 80 to 100%. You can validate here as a potential, as a valid potential, even though it's far from here. Yeah, but at least it's 80% closer. Okay. Here is also a couple of, let's say, 75% close, so 75 to 80% we can, 75 to 100% we can manage it, and then increase our stop loss so that we will not be triggered, we will not be cut off from the opportunity. So you can actually enter here or enter here, but you have to go to lower time frame to get the best. So when you come here, you now move like this. Now move like a check. Make sure you are doing the right thing. Okay. So you see, this is a potential. Actually, this is a potential. Then you need another potential. This is a high where market reverse. This is another high. It reverse. You are now waiting for another retest to any of these, or near them. Okay, so you can sell here. When you sell here, your stop loss, you are going to put your stop loss very, very, let's say your stop loss should be several pips. Like if you calculate the length of the previous reversal, the completed reversal, like the length from here, you can multiply by 3 to get where you are going to place your stop loss, because I know that it's because of the volatility of this market, so that you can be able to stay and make use and take advantage of opportunity. You will not be triggered. Like, imagine this one coming here, it will not trigger you. So when your stop loss is very far, then you will still enjoy the sales. You see a lot of sales. Another one, you will not be triggered. Then it finally did what? Sold. Imagine, good. This is good. You can be. Do you know what is good? You need to enroll for my courses so that you learn much about how to succeed trading good. It is included in my Forex market margin trading. Check down the description of the video. You see the list of those courses. Change your life overnight. Okay. Thank you, and remain successful. Remain connected to WINFXTRADING. Make sure you enroll for any of my courses. Just one course, you are rich overnight. You are a successful trader. You will become a testimonial to others. Thank you. Bye for now.